Good evening, and today is January 22nd, 2024, and it's a Monday. It's the first trading day of this week, and this week is the week 4 of the year 2024, and we have a lot of large gap earning this week. Yeah, both small cap, middle cap, but the large caps. You see Netflix today, right? Netflix today, and I think tomorrow it's gonna be Microsoft, Apple, something like that. Let's see what is. I think last time we checked is Microsoft, right? The earning day 2024. Yeah, tomorrow. Yeah, let's watch tomorrow. See Microsoft. Let's see Apple. I mean, Microsoft really. Oh, 24. Oh, okay. So normally Microsoft and Apple is on the same week, but this earnings season is like a week behind, right? February 1st, which is next week. Normally they are on the same week. Yeah, same week. Yeah, Apple next week. Very interesting. So Microsoft is tomorrow, Apple next week. Let's see what Amazon, Google, big tech, right? I think Amazon. The same with Apple. Next Friday, I guess. Next Thursday, actually. Let's see what is Google. Okay, so January 30, okay, which is next week. So Microsoft a little bit early, 30, Tuesday. So next Tuesday. Yeah, next Tuesday. Next Tuesday. Double check. Oh, January 30. Yes, next week. We misspoken. We thought it's tomorrow, but it's not. Next week, the week 5, not this week. Yeah, normally, that's right. So, big tech gonna be next week, not this week. We misspoke. We thought that Microsoft gonna be tomorrow, Tuesday. But anyway, that's the earning, and that's we watch, right? We want to see how the market react to big tech, because the big tech, like I think 60% of the ETF. Alright, we want TCF, the TCF that we are, let's say the SPY that we are checking right now. So we're going to see, you see the weight. So the top 10 is almost 31% of big data, of big tech company, right? Yeah, Microsoft at the top, and then Apple, and Nvidia, Amazon, Alphabet, which is Google right there, and you have Facebook, which is a new company, Meta, and then you have Berkshire Hathaway, I think is Warren Buffett company, and you have Tesla and Broadcom. So they are occupy almost 1/3 of the whole index right there. That means they have a huge impact. The earning has huge impact. That's why we try to watch. All right, go back to the economic calendar. So this week on Thursday we have a high impact, or from high impact to medium impact news is the GDP number. So that's very important, right? Because that's going to impact to see how the economy, performing, and that will be a factor into the Fed, your decision to raise interest rates or hold it or cut it. But anticipate that this year they're going to cut interest rate. So let's see how it's play out. Yeah, this week there's no option expiration day or week at all, so it's out of the circle now. Okay, so let's look at the price action, the market moving today. Yeah, before we go to the price action, we want to review a little bit on Friday, right? On Friday we didn't do the end of day review Friday, and the reason for that because we are get whacked. Basically, we are broke our rule, right? Basically we broke our rule. We lost in one trade. We lost more than 1 hour. We let it lost 2 hours, and that's the first time we broke our rule for this year, and that's really something that we're happy that we broke the rules, so we can learn from our mistake right there. We don't say it lightly, right? But we learned that we celebrate both our win and loss. In this case, we celebrate our loss, and that's the mentality we need to maintain. So. And also we have, when we break our rule, we need to stop trading. So today we didn't take any trades. Let's see, maybe we want to stop at least 2 or 3 days. Let us detach ourselves from the outcome, reset our mindset so we can trade better. So basically we try to short around here. Yeah, we try short around here. You see, we try short around here. We short them, and then we re-entry one more time around here. However, when it hit our stop loss around here, we let it run, because our reason say, oh, we just trade very small size, right? Just one. We just trade at one stock. One single stock, right? The size just one stock. So that's the reason why we say, oh, let's see, because we hope that it's gonna come down. So that means we commit 2 mistakes right there. The first mistake we make is that, oh, because it's small size, so it doesn't hurt much. But that's the mistake, because when we are making a rule, that means we have to commit to follow a rule no matter what. So there's no reason to let it. So that means we have to follow our rules right there. So next time, anything related to stop loss, we have to follow. Period. No excuse. Right? Okay, let's follow the logic, right? Because it's more, we just trade one stock at a time. You know, side just one stock. Even though one stock at a time, but we fail to commit to our rule, then when we scale up into the size of, you know, 10, size 10s, right? 10 stock or 100 stock, there's a size 10s, or say 100, 1,000 and up, then you see the impact going to be huge. It really, it turned, you know, right now 1R is just, you know, 50 cents, right? So if we let it run over to 2R is $1, right? Because we only trade one size 1, right? But if later on, if the size big and we don't resolve our psychology, you know, issue right there, then it will spill over. That's the first lesson we learned. The second lesson we learned that we have to come to terms that we try to be right? We short right here, and then we try, oh, we're gonna short again. We try to be right. That's the two basics mistakes that we make right there. The first mistake is that we don't follow our rule. The rules say what? Put the stop loss, and when he stop loss, get out. But we reason, oh, we say small size. It doesn't matter, right? That's our reason at that moment. And the second is, it really exposed that we are still have problem that we need to work on. Our problem is that we try to be right. So right here, if we see that it fell, you know, to break to the downside, then we should go up and go long. We need to remain flexible. We cannot be stubborn and try to be right. And you see that the market ripped into our face right there. That's the beautiful lesson we learned right there. So like we say earlier, we need to celebrate both our win and our loss. Our loss teach our lesson. Very beautiful right there. So basically we make mistake. Very fundamental mistake, which is break our rule. You know, instead of let the profit run, we let the loss, you know, run. So that's the fundamental lesson for us right there. So that's the, you know, psychological skill that we need to get improved if we want to be better. We want to be a consistent and profitable trader. We have to overcome that. Yeah, to fundamental mistake right there. Break our rules and try to be right. That's just two lessons right there. So basically right here, the first trade, we try to short right here. And then we try short again around here. The first trade, we follow our rule. We get out at 1R. But the second trade, it kind of like a revenge trade, right? You try to be right, and we let it run. And it run all the way up. Oh man, that's amazing. We make, you know, after a year into the practice, we thought that we're better than that. But you know what? We make mistake. and it's very funny, 101 trading right there. You don't want, you know, you lost more than 1 hour, but we did. That's the reason why this morning we don't take any trade. Too beautiful in setup, but we don't take any trade. But this lesson allows us to review. You see that it's very strange, right? You're not going to short on Friday. That's what we did. But why we want short on a Friday if we see this phenomenal right here, the phenomenal, right? So you remember on Thursday, is this 1 hour? No. Look on the 4-hour time frame. Yeah, let's remove the RSI for now. So we see the momentum to the upside start show up on Thursday. Yes, right here. Is it Thursday? Right here. On Thursday, starting at the PM section. You see that? Look, we mark out the level, right? If it's break through the level, then it's gonna be a real breakout. And you see that it break out that level with huge candle right there. So it gives a signal that, you know, it's gonna go up. But we failed to recognize the market condition right there, and we try to short them, and we paid the price for that when on Friday. We try to short them around here, and we short them one more time, and we make the mistake in terms of market direction because we failed to recognize this signal right here. Right in the PM section, if it come up with a big candle on Thursday, then on Friday we have to go long. That's the lesson we learned right here. Right. Let's take this screenshot and then we can put into our database so we know. So that's a beautiful lesson we learned, right? So Thursday, right? Hold on. So yeah, on Thursday, and I think Thursday, what day is that? Thursday 18. Okay. So Thursday, January 18, 2024. Huge up close candle breaking the key, let's go resistance, right? Or you can say sell side liquidity. No, I mean buy side liquidity. Key resistance. That means that we should go long on Friday. Thus, that the market, the market's sentiment or the market's, market condition that we failed to recognize. So later on, if we see that if this phenomenon, the pattern repeat, then we know exactly what to do, right? You know, on the Thursday, if on the PM section, right? In PM section, right, you have a PM, in this case 13, the candle start 13, right? Break, then go long Friday. That's exactly that happened. And we failed to recognize that. But if we look carefully, we can see another, you know, signal right here. You see this candle right here? This where the PSR switch to go short, and when this candle break to this level huge like that, then go long. It's no longer short. See that? That's another signal for it right there. Yep. Signal candle pizza switch. So that means we go long if is breaking to this candle. So that's an idea right there. So we name that go long. We name this pattern is go long Friday. If Thursday PM up close strongly, right? And this one is on January, happened on January 18, yeah, 18, yes, January 18, 2024 on a Thursday. That's the lesson we learned. Well, we are, let's go today. We walk out too real quick today. Today we have two beautiful setup, but like we said, we said earlier, we try to keep ourselves disciplined right now. We didn't take any trade because the mistake we make Friday, so we want to reset our mindsets before we really go back to trade. So we didn't take any trade, but we saw two beautiful setup. It's a 4 breakout right here, go short right here. You see that? As soon as we see that breakdown here, we're gonna put a and let it go above, and then we put a sell stop, and we have a beautiful move right here. It hit 1.0 DR standard deviation right there. And I think we did take a screenshot for that. I think yes, it's a one short trade and one long trade. So basically we can have the anchor candle or signal candle at 9:30 or at the 10:05, because this candle, when the PSR switch into short, you don't short right away, right? You wait until it above the level, and you put in a short, the sell stop. So in this case, we have two coincident or two entry level right there. And our target gonna be the 1.0 standard deviation to the downside. And very bold that we wait. You know, we didn't take the trade. So it's easy said than done. But actually, if we're in the trade, we may make a little bit. I would say a little bit discomfort when we see it go back here. But if we wait patiently, it will hit 1 point standard deviation to the downside from the DR model right here. So basically, it's a failed breakout short setup, right? We have two candle signal right there, one of 9:30 and one is 10:05 right there, where the PR switch. So put it a sell stop right there at this level. So entry time for us either gonna be this candle at 10:15 or gonna be 10 minutes later or 10:25 will be perfect right here. And it start go down from there and it hit 1.0 standard deviation and then it start reverse go back. And it's a very good trade right there. We have 1-to-6 risk-reward ratio. Basically we reach 35 cents when we go in at this level, and our stop loss is just exactly of the high rate, 485.22, and we get a heel run at 482.5. So it's $2 move right there for Monday. You know, what could be better than that? Yeah, wonderful trade for a short trade right there. Okay, now look at the, which is right here. It's the chart right there. When we take that picture right here. You see this candle or at this candle, and it hit right here at the target is at 13.25 right there. And the next trade first is gonna be a long setup. Okay, so the long setup, it's very simple trade, right? But actually it gives us a very good risk reward. It's 1 to 4, right? The first trade is 1 to 6, that's $2 move, but this you don't need a huge move right here, but you still have a good risk reward ratio right there. It's just less than a dollar move, but look at the risk we we put out. It's just 19 cents. But if we precisely execute this trade, it turn out a very wonderful trade. 1 to 4 risk reward ratio right there. So basically, when we see this candles, the anchor or signal candle at 11, we mark the low right there. As soon as we saw the price drop below that level, we put in a buy stop right away. So basically at the level 482.96, and we execute at this next candle at I think there's some kind of mixed spell right here. It should not be 11:30. I think it should be 12. I think we get the entry time mix type right here. It should be 11. It should be 13:25. Basically 1:25 after 1 p.m. at this candle, and we just target at at the DR low implied right there, and we got 99 cents. So it's 1 to 4 ratio. Yeah, look at the charts right here, right? We have to execute exactly, otherwise we're gonna give back out again right there. You see, it hit just around that lower right there. It come back all the way out and then hit one more time and then it go down. So at the DR, implied DR right here. So we go in at this candle, right? So or this candle 35, yes, or 35, yeah, this we go in at 30 or 35 at this. Oh, I think we go here, I think at 30, not 35. I think we mix type the type right there. So we go in at 30, and then we will get out when it hit right here at 40. So it's about 25 minute trade right there. Yep. Yep. I think let's check screenshot real quick for this 30. Yeah, 30, right? For some reason we put 35, so it's 13, 30. Let's fix that screenshot really quick, right? And then we will have the risk, very low risk right here, right? We risk, yeah, 18, 19 cents. And then we get the reward right here when it hit the DR implied low right there. That's the very easy target for it right there. It hit at 14. Okay, let's take screenshot of this. So we're gonna only on the right, so 18 cents, and then we do right here. So wow, 18 cents. So we go in right here. Oh no, yeah, we go in right here. So it's $1 right there. Actually, oh, almost 1 to 5 risk to reward ratio right there. Yep. So right here, that's our anchor level right there. Oh, actually right here, sorry, 11. So let's check the screenshot to fix the other screenshot. I think we got the time mess up on other screenshots, so we check this one. So basically we have a 4 breakout, and on Monday it's easy to play this setup, right? It's always Monday it fell right now. It swing both sides. That's the market condition right there. Long setup, buy stuff at the low of that candle will be 482. Basically a rig right here, 482.96. For those who use the thinker or swim, you know that when you point to the candle, you read right here, you know the high, the low, the open and close right. So in this case, the low is 82, 482.96 right there. And we the targets for us is the IDR implied low rate, which is I think 481, 83, 98 right here, right? That's the target, and that's mean the risk reward gonna be almost 1 to 5 right there. 18 cents, and we got $1 or 1. Beautiful. Entry time for us is gonna be 1350s, and X6 time is I think 30. So we wait for 30 minutes. That's a good trade right there. The other trade we have wait very long, 1 to 6, but this is 1 to 5, very quick. But sometimes we underestimate a very quick trade right there. Yep, what I want to say. Yeah, beautiful. Yeah, here's the target right there, and he target right there, and here's the candle, signal candle right there, and here's when we entry. Yep, here's our risk reward right there. Okay, let's replay the entry is 30. Yeah, 30. Yeah, basically we fix this, right? We fix. Yep, so we have a good swing shot now. All right, I think that's it for now. Before we wrap up, I want us to look at the 4-hour time frame to see what is sold today. So big candle, and then big candle on Friday close up, and now we see just consolidate. Let's see, it's gonna be continue this momentum or gonna be reverse, go back up. So we can mark this at a fail breakout level, right? You can mark that also. And also this is a level, very close level that we marked early today, right? It's a gap level, right? If you look at the 5-minute time frame, you see the gap level that we marked. The gap up level today is gap up $1, right? Equity. So you see that it gap up right there, the level we gap up. So it haven't resisted gap up level that. So let's see how it's play out. Let's make it a little bit bigger. So that's the gap up level. Let's see, it's gonna be what? It's gonna be refill this level. It's gonna be a fall breakout or gonna be breakout. So let's see that what we anticipate tomorrow. Anyway, thank you for your time and interest. We're always grateful for this opportunity. We do what we love. We are doing what we love, and success is coming our way. Bye for now.